believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-10, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. And Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio 8, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Tuesday, 13th day of March, 2018. Just 48 hours, less than 48 hours, to the Ides of March, which will be Thursday. Just another Thursday here in Studio A. Hey, welcome to the show. Thanks for joining us. We're glad you're here. If you're returning, welcome back. If you're here for the first time, a special welcome to you. We're glad to have you and hope you'll stick around. We are in our second decade now of broadcast history, helping people become traders. That's just what we do. And I hope you'll pencil us in for the next decade. And if we don't have anything to share with you, maybe you have something to share with us. We'd love to hear it. There's a chat box attached to the chart I have up. Well, it's not really attached, but you know what I mean. If you can't see the chart, go to our homepage, cfrn.net. On the right-hand side, click the big microphone, follow the instructions, 30 seconds. You'll be registered through the end of March. Got to do it once a month, only do it once a month, and that gives you one-click access to the show each and every day. As a backup, youtube.com/CFRN/live when the show is live. And if you bookmark that page, you'll always have streaming access there. Fair enough? All right. We also would love to hear about how you found us. Those make for some great sit around the campfire stories. So drop us an email, support@cfrn.net, or drop it into the chat box as we speak, and I'll share it with the audience. We have a global audience. If you got something on your mind, on your chest, something you want to share, you got a rant, you got a rave, you've come to the right place. We'll give you fair air time as long as you don't act ugly, because God don't like ugly. Now look at this. This is a thing of beauty. I know the market's falling, but these are futures contracts, okay? And this isn't somebody's retirement going down the drain. Please don't allow yourself to think that way. I do know traders that will only trade long, and they have differing reasons for that. But the market falls faster than it rises. Can I back that up? I think I can. 30-minute candles. The time it took to go from 2807, we're going to call it 2805 to 2775. So 85. So we got 30 points there. Yeah, that sounds about right. 30 S&P points. Okay, so we've got 1 hour, 2 hours, 3 hours. That's how long it took to fall that far. How long did it take to rise? Yeah, a little bit longer. 1 hour, 2 hours, 3, 4, 5, 6, 7, 8, 9, 9.5, 10. Not unusual. It's how it happens. This gets done quicker than this. And that's okay. Be ready for it. If someone's taught you you shouldn't take advantage of the short side for whatever reason, just revisit the reason, whatever it is. Because there's an awful lot of good opportunities on the short side. And the beautiful thing about futures, especially if you are trading for daily income, is you're going to go home at the end of the day flat anyway. So in a falling market, it would be financial suicide to go long. And in a market that's rallying hard, who wants to be short? See? Whichever way the wind blows, that's the life of a futures trader. Let's look at the numbers from around the world and see how everybody's faring out there today. Hope you had a good morning. Hope you already got your goal for the day. Now you're trying to decide you're going to clean out the garage or go surfing. I would go surfing, but that's just me. All right, here in the U.S., these are the cash markets. We'll get to the futures a little more in depth in a moment. The Dow down 87 points, NASDAQ down 63, make that 64, and accelerating, and the S&P 500 down 11, and the Russell 2000 down 2.5. The NASDAQ would be the mover and shaker of that bunch, down almost 1%. Moving to the commodity basket, crude oil down 76 cents, 1.25%, trading 60.60 last. Gold, nice to see some green there, up $6.20, almost half of 1%, trading 13.27 last. In the Asian markets today, at the close, the Nikkei was green, up 144 points, over half of 1%. Shanghai down 15, half of 1%, and the Hang Seng managed to add. It's unusual to see. I mean, the Hang Seng's been turning in time cards at the end of the day, 500 points, 600 points, 500, 600, 600, and today they added 7. But it's a solid 7. I can see it. European markets, ooh, the blood ran red. FTSE down 65 points at the close, almost 1%. The DAX down 192. Now that's 1.5%. And the CAC down 36, half of 1%. So there you have it, mixed in Asia, red in Europe, and red here at home. The question is, will we continue down? Well, let's just talk about that real quick, and then Mike. Oh, you know what? Mike's got the webinar this afternoon, so let's let him do the recap of what happened in the live training room today. And when I come back, we'll talk about this, which we did talk about in the live training room this morning. And we had some key areas that we thought would make good opportunities to be on the short side of this move. And so far, we were looking for I think a final target at 27.73.
Three.
Yep. What it was?
27.73.
Yeah. Okay. And we're almost there. Where are we? Low so far, 27.74. So, okie doke. Well, Michael, if you're ready, we're ready.
Okay, I will take it away then.
We had broken this trade into two stages, and I'll explain that to you guys when I come back. And, of course, Michael will tell you how to get into the meeting today with him this afternoon, the webinar, which means you may have to cut out of the radio show a little early, and that's okay because we record it. And you can always listen to the most recent shows. You can listen to years of shows by going to youtube.com/CFRN. True story. And I used to every day also publish them at emini.cfrn.net. And I haven't lately. I should get back to it, and I probably will. But you can always go, that's the master archive, youtube.com/CFRN. All right, Mike, I can see your screen. I'll hit mute,
okay.
And it's all yours.
All right. All right. Good afternoon, everyone. Today is Tuesday, the 13th day of March 2018. Let's see. If you have not taken a free trial with us, go to the home page here at cfrn.net. And up at the top, it says sign up for the CFRN live training room, 100% free trial, user indicators, learn our strategy. Click here. When you click there, you'll be brought to this page where all we ask for is your email, your first name, and how you found us. You hit that submit button. Once you hit the submit button, you'll be sent a confirmation link. You must click on the confirmation link, okay? By coming here and clicking there, and then coming here, putting in that information and hitting submit, we still don't know you took the trial until you click the confirmation link. Okay. Once you click that confirmation link, then we know you took the trial. And then and only then can we send you all the information you need to get into the live training room. Okay? Okay. Now, the spreadsheet. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today, again, is the 13th day of March. We made 16 ticks in the euro, 10 ticks in crude, and we lost 8 ticks in the ES. That put us at $100 per contract. Okay. Today it took 49 minutes and 2 trades to get to the goal for the day. At that point, we were up $100 a contract. And then we took 4 more trades, and we ended up back at $100 a contract. Okay, so on the month now, we're at $836. That's over 9 days, and we're averaging $92 a day. On the year, we're at $8,201. That's over 46 days, and we're averaging $178 per day. Okay. Okay. Now let's go take a look at what's going on in the markets. Today in gold, we didn't do anything, but we did miss a couple. We missed a short right here, that huge leg down, and we missed a long right here. And it looks like we missed another long right here that I didn't highlight. And then all this was going up into the high of the day, and it got really choppy in there. So we didn't have anything else. So we missed a couple of nice trades here, 3 of them. 1, 2, 3. All nice winning trades. We missed them all. Okay, on the gold, we didn't end up with anything today. On the euro, the first trade we took right here on the euro, we got 6 ticks profit. Then we missed a couple right here on this move down. And now we weren't going long again here because we had bullish divergence, but we were not trending. Okay, that's why we didn't do anything right in there. We missed a couple of trades here, and then we grabbed this one for plus 10 ticks to give us 16 ticks. Okay. Over here, this was a momentum trade, so we had to break this dynamic resistance before we could do anything. That's why I highlighted here and not over here. Alright, but I missed that. And then we get into the break. And during the break, there was a long trade from right here, a long trade from right there, and then it got really choppy. Alright. So we ended up with plus 16 on the euro today. And crude. Let's see, yeah, we missed a few trades here on crude today. One there, both nice profitable trades. Then the cycle started going down too steep, so we weren't going to do anything here. It was going down way too steep to go long over here. Then it changed direction, started coming off the high of the day. This solid green line right here is the high of the day. Okay, I'll put it in just a minute, Bart. And we came off the high of the day here. Had a short right there that went 4 ticks into profit. It was a momentum short, so it would have been a break even. Another short here. Then we finally grabbed one here for 5 ticks and another one for 5 ticks. But we missed that and that. And then the slingshot started to get all messed up in here. Okay. Recently, it looks like that one right there was a shorting opportunity. Okay. Now, on the ES. Well, we missed this short right here. We took this one and stopped out, minus 8 ticks. We missed that one, and we took this one, had a break even. We missed that one, and that one. And then the slingshot started to move around quite a bit. This is during the break here. There was a short right there, and a short right here during the break. That would have made up those 8 ticks. Then it got really choppy and sideways in here, and it's just about to give a long trade, it looks like. Okay. Hang on, Bart, let me go get that link to the Tuesday meeting. Here it is. This is the link to the 1:15 meeting this afternoon. Okay, it's 1:15 p.m. Eastern Time. Okay, that is the link for that. Now, back here to the spreadsheet. Okay. Okay, hang on just a second, guys. Okay, sorry, Jada was locked out. Okay, so looking at the spreadsheet, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, 16 ticks in the euro, 10 ticks in crude, minus 8 ticks in the ES. Leaves us at plus 100 on the morning. Today, it took... Today, it took 49 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 6 trades. On the month, now we're up $836. That's over 9 days, averaging $92 per day. On the year, we're at 8,201. That's over 46 days, averaging $178 per day. That's one contract, 2 hours per day. Okay. Now, if you have not taken the free trial and you want to take the free trial, go here to the homepage at CFRN.net. Right here it says sign up for the CFRN Live Trading Room, 100% free trial. User indicators learn our strategy. Click here. When you click there, you'll be brought to this page. On this page, all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, well, you don't get a free trial. Okay, you have to click on that confirmation link, because even though you did all this other stuff, we still don't know you took the trial until you click that confirmation link. Okay, and that is it. With that, we'll pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yeah, we are ready. I'll grab the charts.
Okay. All right, and I put the link in there for the meeting this afternoon. It's at 1:15. Okay. It's in less than an hour. Okay.
So, recap of the recap.
Today, it took 49 minutes and 2 trades to get to the goal for the day. At that point, we're at $100 per contract.
Good job. Now, that's another question, traders, that you have to learn to answer. Is 45 minutes into the workday, I'm done. Where do I go from here? You know, you're gonna have to face up to that and deal with it. You can sit back down and try bell to bell, and once you're battered and bruised, you can then still do the right thing. So it's up to you, but it's not fun. It really isn't, and it just rattles the mind. It should make sense. Of course, if I work harder, I'll make more. Yeah, not necessarily. The guy that sits in the cubicle next to you, he could breeze in, lean over the back of his chair, click the mouse twice, walk out. You don't see him again for another week. And his P&L is greener than yours. And it makes no sense because you're there 12 hours a day. Well, you're reading all the magazines, the newspapers. I said magazine. People are going, magazine? What's a magazine? Well, they still have them. We're going to talk about them in just a moment. Apple is about to buy the Netflix of magazine publishing. So, to all of those who are learning how to trade, you're just standing there and you're looking up Trader Mountain, and you see your spot, and you're ready to roll. Just remember, brute force will not accomplish the task. You've got to learn to think in probabilities. You got to work smart, not hard. You want to be that guy that can breeze in and click the mouse twice and go. You won't be right away because you have to learn how markets operate. You have to understand the mentality of the people behind the candles. I mean, this is a shadow, this is a reflection, these are footprints in the sand. What this is doing is it's giving us a graphical display of buying and selling decisions that were made milliseconds ago. But a millisecond's a millisecond, which makes this, in and of itself, pure price, a lagging indicator. That's right. That's all we have. That's all we have to work with, are lagging indicators, unless you learn how to read minds. If you do, I'd like to sign up for your room, because we would have a party. Okay, this morning in the live training room, we took a look at the price action here. Now let's make sure, you know, I need to go through and roll all of my charts, but let me see if I've done this one. Yes, I did this one. 8 months out of the year, my universal time code is 4. 4 months out of the year, That's when I get to sleep an extra hour. In theory, it's a 5. That's because Arizona doesn't do daylight savings time. But most of you will never have to be concerned about that. Just set it once and forget it. Okay. Just want to make sure when I look at this hour, okay, this right here, where we put in the high of the day, that happened on the 9:30 candle, 9:30 to 10 a.m. So, now does that mean we got a 10 a.m. reversal? Well, it happened before 10 a.m. That's when it happened, really. This was a big green candle at one point. I mean, so we had what may appeared to be a very bullish opening sentiment that folded rather quickly when it put in a slightly higher high. We had a high on the week of 28.05 and a quarter, and this hit 28.07 and a quarter. So just another 2 points, and once it touched it, it was rejected. These buyers that were patient all night and showed some muscle this morning, as soon as price got up to 28.07 and a quarter, they folded. We'll look at this on a larger time frame in a bit later in the show and see maybe if we can figure out why they folded. What we were looking to do this morning, I think we were on the 10:30 candle, or we were just starting the 10:30 candle. Now I know somebody wrote them down because I heard them talk about it. Let me open the chat box. There's bound to be somebody here that was in the training room this morning. We were looking at I think about 3 points up here. I'm trying, was it 97 to 94? Maybe that was it. 96 to 93. It might have been 3 points. Whatever it was, is whoever was there would remember. And I called this minor support. Why? Because really we tested it once. Unlike this down here, which we've tested and tested and tested and tested. So and tested. So I saw this zone from last week. Okay, so I didn't cook this up this past Sunday. It was the Sunday before that. Okay, last week's zone. Now partners have this week's zones. They got them at 6:15 a.m. Eastern yesterday, as they do each week, and then I revealed them to the entire CFRN community on Thursday. But we'll just say the partners weren't surprised that price ran up to where it did today and stopped, or yesterday and today. They have a real thorough understanding of why, and you will too on Thursday. I guess you probably already do because I even mentioned it. Yeah? Okay, so then we thought if we can get past this minor support, then we'll have a trade opportunity down to the major support, and that major support being this 85.86. And as you can see, we did tarry there right at the zone, last week's zone, the major support for a half hour, plus whatever time was here and whatever time was here. So I think on that way down, we were looking at, I don't know, was it 90 to 87? I should have written them down. I figured there'd be somebody here. Okay. And then if we got through 85, we would get short 83, and we would trade 83 down to 73. We only got to 74. Now look where we're at. From 74, we've gone all the way back to 81. That's what happens if you don't trail a stop. You've got to figure out how much are you willing to give back, once you have accomplished how much of your goal. And these are decisions that should be made before you enter the trade, not during the trade. Because when there's bullets flying past your head, you don't do your best thinking. It's when you're calm, cool, collected, analytical. You literally distance yourself from it. You're not emotionally involved. You shouldn't be emotionally involved ever, but sometimes that takes a while to break. That worked out well, but again, see the target. Now, partners also understand why I put the target where I put the target, and it backs up what I always teach you guys, that zones are an area. Sometimes they turn on a dime, and sometimes it's an area, just as targets. Okay, as you approach your target, if you're trading multiple contracts, you should be down to your smallest position as you approach that target, and that's where you run the tightest stop. Because if in a perfect world you saw the potential for this to give you 10 points, as it's approaching 10, that means you already have 7, 8, 9, 10 wouldn't like to see you give all that back. So, but if I, that's okay. Getting stopped out with profit is a beautiful thing. It should happen to you every day, right? Don't worry about what you leave on the table. Over time, you will, if you stick around, you will learn to distance yourself from that. Hal, ask your question again. Are the tabs on the chart the only ones that you use? Yes, these are. The S&P and the Dow, Russell, NQ, gold, bonds, and then down here I have what do I got? Soybeans and crude. Yeah, those are them. These are they. All right, we're going to talk about Apple for a minute. They're buying the Netflix of magazine publishing. What I do want to do is give you a chance to take a screenshot of the alerts that went out last night. So let me get there. Now the new browser, the new CFRN partner browser, has a built-in screen capture which works really well. And hopefully within a short period of time you'll all be able to experience that little camera. Okay, here we go. Got the email up. All right, here's the email that went out last night. Got it out at 8:05 Eastern. 5, 4, 3, 2, 1. Okay. On the S&P 500 Emini Futures, the email said, if you can, by 27.92. That opportunity presented itself right here. By 27.92. So here's an example. Just ask yourself, at what distance would I have needed to trail my stop to remain in the trade on this pullback right here? The high of that candle is 96. The low of this candle is 92. That's 4 points right there. Now 92 plus those 4 would put you up to 96. So you literally to the tick on this pullback right here, okay, you're long 92, and the low of this candle is 92. Important prices, important areas are almost always tested. So the point to be made, or the takeaway from this, is that if you lock in your gains too quickly. And Mark talks a lot about this in his book, Trading in the Zone. You get taken out. I got stopped out to the tick. Yep, it happens. It really does. Right to the tick. And then it runs. It runs from 92 all the way up to 2807. It's 15 S&P points. That's what the market made available. Last night's email also said, if the opportunity presents itself, consider selling 2782. And that opportunity did pop up. I believe that was the number that I gave you guys this morning in the training room, 2782. Now you see why. And we made it down to 74. So that's 8 S&P points. $400 per contract. For a 10 contract trader, that 30-minute candle there had the potential to earn $4 grand. You're not going to get out the swing low though. That's the thing. That's the rub up. You're going to trail that stop, and you're going to give some of it back. Because if you did not get out, if you did not take any profits, you're in a position now where you're underwater. And as we know, important prices, important areas are almost always tested. So this could be nothing more than a test of the trigger, and now we get another leg to the downside. You see what I'm saying? Okay. All right, what other questions are here? Let's see. Why 30-minute charts? 30 minutes is not any sort of a magical number or mystical. It's just a time frame that I'm comfortable with. And if you're comfortable with a 5-minute, that's okay. In the training room each morning, we execute trades on a range chart for a lot of different reasons, which Mike will be happy to explain to you in the morning in the training room, all the reasons that we have for using that, because it allows us to execute a trade with surgical precision. This is more discretionary type trading, where there are guidelines but not hard and fast rules. What new traders need coming into the business, or traders who have not found consistent profitability, they need a hard and fast set of rules where there's never any guesswork. You always know what you're supposed to do, and if you do what you're supposed to do when you're supposed to do it, you will have a definable edge in the markets. Kind of like science, but looks a whole lot like an art project gone bad. So Hal, I see the second part of your question. Why 30 minutes instead of the 4-tick range? Now, the 4-tick range, you got to keep that in mind, because a 4-tick chart's too fast to trade. But the reason here is, again, because this is discretionary trading, and this is tied into the Concierge Trade Alerts that we email to the subscribers each evening. Brian says it's lingering there now. Watching for entry, but no green candles yet in lunchtime, but okay. I'm going to have to clarify for me, Brian, what you're referring to. You're referring to what's happening right here, right now? Is that it? Okay. All right, I see. Yeah. Gotcha. Hal, so you don't actually trade on those 4-tick range charts? No, we actually do, Hal. There's different types of trading. There's rules-based trading, where you're trading for daily income, okay? And that's what every trader should learn up front, because it gives them a firm foundation to build their trading business on. Once you have some time and experience in the markets, you may move to larger time frames, which involves larger risk, which involves larger account size, because you have to be able to handle the overnight margins and that type of thing. So what you've seen today is you've seen two different styles of trading. You've seen the rules-based trading that we do in the live training room. That's part of the 90-day mentoring program. And now you're seeing the discretionary side. And I do one-on-one mentoring sessions with the partners and subscribers to the Concierge Trade Alerts, so that they can also understand this type of methodology. John's here, guys. Let me get his mic open. John, welcome to the show.
Hi there. Thanks very much for the invite. Actually, I was on about a quarter of an hour ago.
I'm so sorry. Yeah, I lost track of time. Yeah, go ahead.
I was going to call this rally that we've just had in the S&P, but it's looking a little bit shaky now.
Yeah,
to whether.
Yeah, I agree.
But look, I'll tell you why it rallied there. Just one second. Sorry.
Go ahead. Now, on a 30-minute chart, that doesn't look like so much of a rally. But if we were to drop it down to a 5-minute, we'll get a different look. Oh, 5 minutes just barely starting to turn. Got a 4-tick range here. Yeah, I'm not convinced on any time frame that we can rally up out of here. Not now. Those of you that have done one-on-one with me, I mean, or been in the workshops, you know what this is and where it's headed. Now, you say, well, we could be bouncing and it could be about to turn. That's true. It is possible.
Okay, sorry about that.
Oh, no problem. No problem.
Yeah, something just for the while we're on the, for some reason this morning, Dwayne, the volume, your volume is coming in unbelievably loud on my computer. I don't know whether it's my problem or whether something happened with you, but I've had to turn the volume right down to be able to hear you. But
I don't know. What about Michael?
Look, I want to tell you
Michael,
something.
When he came on, was his volume loud?
I didn't hear him.
Oh,
didn't hear him.
Okay.
Anyway, look, we've got a momentous day developing in these markets right now. The most important thing is we have a massive reversal going on in the metals. In my view, they're turning exponentially bullish here. I mean, I'm really starting to get very bullish on these metals right now. We have what I call a positive divergent buy signal on the silver this morning. We came down and we tested the 1314 on the news of the CPI early in the morning, and we reversed right off it. As a matter of fact, we had some buy stops on the upside that caught us into that move. We sold it, I think, at 1327. It came down to 1319. We went back long at 1321. We're still long right now. In fact, we're going to maximum position long. That's how bullish I am. And I think, look, the gold stocks are kind of underperforming. After opening stronger, they kind of went weaker. We saw a rally in the dust to begin with, which I was kind of expecting. But now the gold stocks are starting to strengthen up. And the markets at the same time are not acting well at all today. This is a very bad development today. I'll get into that in a minute. But the right now the metals are really starting to, I think they're going to accelerate to the upside right almost from here. The palladium had a massive turnaround. It's up 24 on the day, and I sort of saw that coming as well. And the platinum, sneaked higher, literally sneaked higher in the last couple of days. Remember, it was having trouble getting, it was around the 950, and suddenly we're at 970. You know, it almost blinked and they were at 970. If you look at the platinum chart, you'll see that we had a $150 move off the December low. We had a zigzag, you know, pullback, and now we're going back to an impulse move. My next target on the platinum is 1100, and as I'm looking for 1500 on the gold, and I'm looking for 18, 19, 20, 21 on the silver. You know, fairly. You know, I think the silver is going to shock people once it gets past about 1670. It's you know, the gold has a triple daily bottom on it right now, and it is you know, that's kind of a once in a blue moon occurrence. Now, you know, you can never say never, but I mean, right now the gold appears to be setting up for considerable upside from here. You know, there's a lot of problems in the world that are coming to the surface. There's you know, the appointment, as we predicted on this show months ago, favorability for Mike Pompeo to become Secretary of State. You know, they've moved the deputy director up to the director. That's probably not a bad idea. Although I think you know, putting Kelly over there probably would have been even better. But Pompeo being Secretary of State now is probably the right move ahead of a Korea summit. But in the meantime, you've got Russia is getting very belligerent, and all this stuff going on in England is very dangerous. So you know, the gold is responding. Then you got the Iranian situation is also kind of bullish for gold. So, and then you've got the inflation factor, which is the fundamental reason for gold to be going higher anyway. So, and the other thing is the grains. I'd go back long the grains right now. We were long and we sold some of them this morning. I'd put a buy stop on the wheat at about 491, and the corn just above the market about 394, and I'd be long I'd take a shot at the beans right here. Beans look like they're going to start going higher from here. So now the reversal actually is getting better. I do have a pretty strong buy signal on the indices right now, and I got a sell signal. Look, we went long the VIX at 39.50 or something this morning, and we sold them at the 40.70, and they're going down right now. And the thing is, look, I think this is if you look at the chart that's up in front of us right now, you'll see it's kind of a three-wave pullback. Okay,
you're talking about this is the Dow I've got up right now.
Right, exactly.
Okay.
They're all pretty much the same. Okay. But you know, we got this pullback, and now we're starting to advance again to the upside, and actually we could go to impulse, back to an impulse wave on the upside. Remember I said yesterday we might be in for a one-day pullback in the market. I think this is it. And you know, the stocks just had a bit of a shakeout. They're actually turning quite bullish now, and you know, we could potentially go to a new high from here. But the next high we go to, you know, depending on how far we go upwards from here, and we still could go up, you know, for the rest of the week even. You know, it's in my this is probably the last rally we're going to get before the next sell-off. So we got to be mindful of that. Even if it's a failed rally today, you know, that would be even worse. But right now we're sort of, you know, actually coming back above your support line there, which is a good thing. So and look, the VIX is, if you can pull up the VIX for a second, yeah, well, VXX, you'll see, you know, I've been saying about this thing wants to go to 35, and we got up to 41 almost this morning. We're back down below 40 now, and we might be on our way to 35, because this has actually created a fairly negative setup for the VIX, this kind of mini reversal we just got going on here in the market, and the market's getting more traction. So it could actually be a kind of a pause that refreshes.
Who was that? Coca-Cola? Was that the Coca-Cola slogan? The pause that refreshes?
Oh yeah, right, yeah.
Okay, we're gonna do a chart of the VXX. All right, here we go. Oh, let me log out of this thing, I guess. charts. Okay. VXX. I pulled up the energy sector. That's not what you want.
No.
What do you want? Which one of these do you want? VXX. Right here. This one?
Yeah. VXX, just VXX alone. Yeah, that's the one. That's the one. Yeah.
Okay.
Yeah, you see, I mean, you see these, we've had, what, 3-4 down days there, a series of down days, a little bit of an up day. Actually, we had two up days, I think, yesterday and today. Now, if you go to a 15-minute chart.
You know what? This is end of day data. You know, it's because I'm not logged in. I could yeah, give me a minute to log in, and because I have the data package that powers it. So let me do that real quick and see if it changes anything.
Yeah, as soon as you see this, I mean, we're look, we were at 40.20 when I started talking. We're at 39.70 right now. So this and I've done some adjustments on markets recently, and I'm this thing, boy, every single time I get one of these buy signals, it works 100% accurate virtually. And we had one this morning on the metals, and look at where we are. And then we have one, off a very very scary bottom, frankly, an hour ago. And look at the way the market's rallying off this. It's pretty incredible, actually. And it seems we found something pretty special here. And I actually put it actually got me into just about everything at just off the lows that we made a short while ago.
Yeah, hang on, I'm trying to get this thing set right. I'm going to do that. Whoever's calling me on that bat phone line online, I can't answer that. If you're in the audience and you're attempting to call me, you have to communicate with me through the chat box. Sorry about that. Okay, all right, I got it working now. Okay, so now we have real-time data, and we don't need this in the way.
Yeah, you see that cell on the VIX? You have it perfectly. Look at that. Kind of looks a bit. Yeah. It doesn't. I mean, you've got a kind of.
Would you want to go to 15-minute? Is that what you said?
Yeah. No, actually, you can see it even better on this. Is that a 60?
No, that was a 30.
Yeah. 30. Okay. Well, there you go. And you see the 15. You see how we kind of made a three-way rally, and now that's stopped, and it's reversed. If you like.
There's the 15. Yeah.
Yeah, and look at the gap. I mean, look at tested the gap, Dwayne. How about that?
Yeah.
To tested that gap from a couple of days ago.
And failed.
So it puts this
That's a definite sign of weakness right there. It could not fill the gap. Yep.
Yeah, exactly. So this is good for the market. The market's responding very impressively, I might say. So and it was kind of troubling this morning, because when the markets, we did a great job this morning capturing almost the highs. And before this happened, I just had a feeling that we were having trouble getting any higher. Next thing you know, we turned down, and it really got quite shaky for a while. And and then to have this reversal is certainly encouraging. If it is selling in the morning and rallying in the afternoon is a good thing to be happening with the markets. However, I did say earlier on we might get a lunchtime rally. This is a pretty good lunchtime rally. Whether it remains just a rally and rolls over, and the VIX goes back up again, we have to keep that in mind as a possibility. But on the other hand, it does look like a three-wave pullback in the market that may have completed itself and is opening the way up for the market to have another shot at the upside. beyond where we went this morning. But, you know, I think, look, the higher we are, the more dangerous the market is going to get in terms of the second, you know, the other shoe to drop, if you like. And all of these things are kind of on my mind today. So, and look, if the gold and silver start going a lot higher later on today, that could, you know, could cause a bit of problem for the market too. So, you know, but right now we're doing okay. Right now we're doing pretty well. We've had a good trade, put it that way.
Gotcha. Jackie, or Mickey, I'm sorry. Mickey, I see your question there in the audience. Do you buy the WTZ as a stock or a futures contract? That's really just our abbreviation for weekly trading zone. That's something that we publish for the partners every Monday. Those are the, I think of it as a football field, a gridiron, where you've got the 50-yard line and the 40 and the 30 and the 20, and we kind of map out going into the week where we think the market will trade. And as you can see, even though these are last week's zones, they still got a little something left in them. So if you're not on the free trial, Mickey, if you have questions about that, you're talking about gold. Okay, what about the gold? This is okay. These are gold futures. If that's what you're asking, are you talking about the difference between physical? Do you buy gold as a stock or as a futures contract? You can buy gold. You can buy it physically. You can buy a futures contract, like you're looking at here, which represents gold. You can buy stock in gold companies, companies that mine for gold, exploration companies, development companies, gold stocks. And additionally, you can, and this is certainly no recommendation, there are gold ETFs where it's like, it's as simple as buying a share of stock, but it is a misrepresentation of the truth. It creates the illusion that you've diversified your portfolio and that you now have 10% exposure to precious metals. What you have is some paper. It's phony paper that the government allows them to pass off as the real thing. It says right in their disclosures, or their what is that thing that comes with an ETF, John? And what is it? The prospectus. The prospectus. Right in the prospectus. We brought it out one day, drug it out on the radio show, and let everybody read it for themselves on the big screen. They do not and are not required to take the money that you give them and go buy gold. And the total amount of money in their fund that you bought these shares, this ETF, they could have $9 billion in there, and they're not required to have 9 ounces of gold. But yet everyone is in this like medicated state where they just shuffle along and believe. Garrett had that one quote. I can't remember it now, but I got to get him back maybe later this week. So those are the different ways that you can purchase and trade in gold. The most liquid, simple. Now those ETFs, they are fine for day trading, but you don't get the leverage you get with futures. So I don't know why anyone would want to, but you cannot hold them as an investment because it does not represent actual ownership of gold. It's like playing cowboys, and that would be, I guess that's not politically correct anymore to say, so I won't. We got to be politically correct. Okay, does that take care of your question there, Mickey? All right, go ahead, John.
So,
you mentioned beans earlier. What happened with the beans?
Oh yeah, the beans. You know what? I put a stopper on the beans around 1046.5 or so, and a little bit below the on the meal because the wheat is coming off here, which is bothering me. Actually, the rest of the grains are coming down, so I prefer it when all the grains are going together. So it just makes me a little bit cautious on the beans, even though they've been performing well in the last couple of days, at least for a bounce. So now we just ticked to a new high on the gold as we speak, looking better and better here. And also, if you look at the silver, the USLV in particular is breaking a very considerable downtrend, and it looks very good on the chart. USLV, and the nugget is starting to shape up here as well, right now.
USLV. Is that a Credit Suisse product?
I don't know what it is. It's a triple silver ETF, but it's based on the silver, not the stock.
I gotta get all this stuff set up. I haven't even begun to. Okay, there we go. I guess this is on the daily chart. This is the one you're looking at?
See the way it's turning up there? It looks pretty good, doesn't it? Look at that.
Yeah.
I see it going
vertically. It managed right here. Look at that wick. It managed to just perfectly close the gap.
Yeah.
And now we're going to run up against that same resistance again. If we can get through that.
Well, we got to get through. We got to get the CPI behind us, or the PPI tomorrow. That's the key. But right now the market's moving up ahead of that. So, and then we got the Fed coming in as well. So we got a lot of factors.
On the 21st, is that right? No, because today's the 13th.
Yeah, I mean, given the history of metals going up on higher rates, it appears to me, as we've been saying on this show, that the metals are turning upward ahead of the rate hike. And last December we turned up a couple of days before the rate hike, and then we had a $150 move to the upside. This time we're turning a week ahead of the possible rate hike, and I think we're going to have a possibly an even bigger outcome to the upside.
Look at Bitcoin here. Why do I have no price over here in this column? I didn't notice that. BTC US dollar, that's what we wanted. Oh, there's a price. Okay. So we're at $9,237. Still just towing that line across there. It's gonna take getting through 12,000 with enough oomph that we hold it on a pullback, because surely as we break it, it will pull back. And if we can get over that 12,000 hump, well, we'll see. There's still people predicting some pretty big numbers. In fact, that one guy that you like, I can't remember his name. I brought his name up one day, and you said that you thought a lot of him. That he
Chinese guy.
Yeah, exactly, right.
Yeah.
I can't think of his name. All right, anything else you want to cover?
No, listen, thanks very much for the. Other than the dollar is breaking. Remember, we bought it. I mean, we actually kind of gave a pretty good prep to everybody yesterday, because we brought up these issues yesterday before right. Today's rebound, and kind of outlined it. And we also suggested the dollar might be in trouble, and the dollar is breaking down right now. It's getting close to the 89 level, and possibly is ready for an acceleration to the downside.
All right, we'll keep an eye on it. Thanks, Sean.
Okay. All right. Thanks very much. Bye.
Bye-bye. Okay, last night's email on the Russell. Consider buying 1612. They made it a 1615. That's 38 ticks at $10 a tick, so it's $380 per contract. But we don't get out at the swing high or swing low. Why? Because we trail a stop. Well, maybe you ought to quit trailing that stop. No, we like trailing that stop. 1601. So if you sold 1601, your get out price, the low is 1595.70, so we'll call it 96. So there was 5 points there. It's 50 ticks, $10 a tick, 5 per contract. Except you can't get out at the swing low. Darn it. NQ. Okay, we did some projections here. I guess it was yesterday. What did the NQ do for us last night? The email said consider buying 71.95. $71.95. Yeah. 71.95. Okay, 71.95, and the swing high was 72.14. So 14 and 5. Is that right? NQ. Yeah, 71.95. So, what do we got? I'll call it 15 points. At $20 a point, that's $300 per contract available. Okay? If you got out at the last tick, right here. But you trail the stop, so you're not going to walk with it all. Just can't say that enough, because I don't want you to have unrealistic expectations. That's one of the reasons so many people struggle with trading and then ultimately fail, is because somewhat unfairly and unjustly put false expectations in their mind, and when they couldn't live up to a false expectation, they somehow, turned on themselves. The NQ on the flip side said if you get a chance to sell 71.20, take it. If you took it, you got down to 70.80, so that's 40 points at $20 a point, $800 per contract available. Now, let's say you're trailing a stop, you only get half of that. Okay, well that's $400 per contract available. If you've earned the right to trade 10 contracts, and you don't earn the right by working some other kind of job and saving up money to come do this. No, you have to earn that money here. Okay, that's how you earn the right to trade 10 contracts. That's $4,000 for the morning's work, or this trade, or however you want to look at it. And that's if you only caught half the move. So you were trailing at a good distance because you didn't want to spook it, right? You only got half. Gold. Last night we said to consider selling at 13.20. Got down to 13.14. And that math's not right. That should be 600 on 8. There we go. Again, if you got stopped out, you only got half, that's 300 per contract available. And for the 10 contract trader, that's $3,000. Okay? It's all relative based upon where you're at right now on your journey up Trader Mountain. And don't waste your time, energy, or treasure trying to be someone that you're not. Find out who you are as a trader. How other people found their success. Do you need a definable edge in the market? You most certainly do. Do you need to know how to think in probabilities? I don't see how you can survive without it. But beyond that, time. And if you have a mentor, that's always a plus. On bonds, the email said to consider buying 143.28. 143.28. At 144.28, that would have been $1,000 per contract. Didn't quite make it that far. So from 143.28, the swing high, 141.15. So that's about 19 ticks at 31.25 per tick. And on the short side, 143.18, horizontal crosshair, 143.18. And we put in a low at 143.13. 5 times 31.25 per tick. About $150 per contract. Okie doke. That leaves crude. And we'll get rid of these for now, as we don't need them for this. Okay, crude. Last night we said to consider buying 61.60. Okay, on a 30-minute chart, you're going to have too much risk here. You're going to have too much risk here. Okay, even though there was some nice upside, almost 70 cents. No, 30 cents, $300 per contract. But on a 30-minute, the risk side of that trade is out of whack. You've got to go to your 5-minute and the 4-tick range if necessary to find that entry. And on the short side, so 60.90. There's hairs, there's 90. Same thing on both of those. Got to find an entry on a smaller time frame, and if you don't sweat it. What do? You just wait for the next market and the next alert to set up and trigger. The S&P again from last night, we had 15 points to the upside and 8 points to the downside. $50 per point. Now, Apple is buying the virtual newsstand texture known as the Netflix of magazine publishing. And if you, like me, did not know before today that texture existed, well, welcome. Welcome to the crowd. Apparently you and I are the only ones in the world who didn't know. Apple's Senior Vice President of Internet Software and Services, Eddie Q, said in a statement yesterday, texture gives readers access to roughly 200 magazines for a $9.99 monthly fee. Texture was formerly known as Next Issue and is owned by Condé Nast, Hearst, Meredith, Rogers Media, and KKR. It is the latest in a series of Apple acquisitions that have included Spotify, Pandora competitor Beats for Apple Music, and Booklamp, which TechCrunch once referred to as the Pandora for books. We could not imagine a better home or future for the service, according to John Laughlin, CEO of Next Issue, in a statement. Yeah, because he just got a big check. Paid to the order of. Okay, we've got to go find, we got to learn more about these folks who call themselves Texture. And apparently that was for an undisclosed sum because the article didn't disclose it. Texture.com. Magazines Unbound and Unlimited. Enjoy a 7-day free trial, then just $9.99 a month. Okay. 200 magazines, 200 plus, one app. Vanity Fair, Esquire, National Geographic. Look at this. I dare say that might not be, I don't know if I'd call it the Netflix, but yeah, I guess, you know, getting a magazine these days, You could subscribe to them, but I mean, if you just decided you wanted to read, you heard there was a great article in this month's New York or Wired. Would it be on their website? Maybe. I wonder how much of this content is only in the print edition and not. I'm going to enjoy a 7-day free trial. That's what I'm going to do, just to see what it's like. But my go-to app on probably on my phone and certainly on the iPad would be the Flipboard, because Flipboard is a magazine that you're the editor. You go through and you tell it what categories, what topics, the things that you're interested in. And when you open it, like a big glossy magazine, it shows you just the stuff you're interested in, not the stuff you're not interested in. Pretty clever, huh? And it's free, 100% free. Brian says he sold 85.50. Oh, okay. We'll see how it goes. See how it goes. May I ask, Brian, what you used as a trigger for that? Alright, good word for the day. Resistance scalps, small double top. Gotcha. Gotcha. Okay. Something we could all use a little bit more of is self-control. I think. I know that as far as traders go, self-control, discipline, whatever you want to call it, it's important. It's an issue, and you need to address it, not only in your trading, but in your. I mean, you could have the greatest trading plan in the world. So awesome, gives you such a definable edge, but if you fail to follow it, it becomes worthless. It has no value. So today and tomorrow we'll talk about the secret of self-control. James 1:14 says that a man's temptation is due to the pull of his own inward desires. For the next few days, let's look at how to develop some self-control. Here's the first step. Accept responsibility for your lack of self-control. Admit your problem. A man's temptation is due to the pull of his own inward desires, which can be enormously attractive. The main reason you do things is because you like to do them. When you know something's bad for you, but you still do it, it's because you want to. Sometimes we try to ignore the problem of self-control or deny it, with statements like, what problem? I don't have a problem. It's just the way I am. Besides, everybody else is doing it. Sometimes we blame others. Well, if I'd just had different parents, or even the old Flip Wilson, the devil made me do it. As long as you waste your energy making excuses, you can't make progress. James points out that we like to take the path of least resistance, and giving in to temptation is usually the easiest course. Starting point for developing self-control is to face what God has already said in His Word. John 8:34, everyone who sins is a slave to sin. So, do you want more self-control? Do you? Then first, you got to be willing to admit you have a problem. And be specific about it. You don't have to run around and tell the neighborhood. Talk to God. Talk to yourself. Sit down and have a good talk with yourself and God. I have this problem. Whatever that problem is, just insert it. It's not like he doesn't know anyway. He just needs to hear you admit that you know it. This is where I need your help. Now, your problem can be anything from food to drink to drugs to words to temper to money to exercise, sex, TV, clothes, time. These are all areas where we need self-control. So the best place to start, day one, get on your knees, talk to God about the problem. Don't call it the pink elephant in the room. Call it what it is. Speak it out. Because who the sun sets free is free indeed. As you talk to him, believe in your heart that with his help, you will be able to solve the problem, whatever it is. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, whatever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
And given home. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.